Rohit Srivastav is joining us right now, fund manager with Sharekhan. Rohit, good morning. Good to have you here. What's your view, Rohit, now? The market's at about 7,800?
Well, the view remains the same. We didn't get past the 79.80 mark, which we discussed last time, and staying below that, my sense is that we can still head to lower levels. We are seeing, very thin moves right now, between the 77.70 mark and probably 78.50 on the upside for very, very short-term levels. I think the more of pressure would probably come in only below 7770. So I think that's a key level for the near term to watch. If that breaks, then we'll probably see closer to 7600 or 7550 next. But my sense is that we should be looking for the market to actually head lower from here.
Okay, you got stocks which are coming up more across the board market. Tata Coffee, Rallis India, Tata Power, Balrampur Chini. You got L&T Finance, Chambal Fertilizer. You got RCF, Rashtriya Chemical, Arvind. You got Neyveli Lignite, and so on and so forth. Orient Cements, Jagran. These are stocks with volumes and some meaningful price activity. Texmaco Rail. So this is the start so far. The auto companies which reported numbers for the month of April, post-market are at the bottom of the screen as well. As we were saying, except Hero, in the local market, most two-wheeler companies have reported 20% plus volume growth. CCL Products is up 13% now. That's a coffee company. 219 on CCL Products. So, and it's very strong business model. And they've done very well over the years. Oberoi Realty is up 1.5%. Zydus is down 1.5%. PI Industries is up 0.17%. MRF is up 1.4%, 1.5%. Nalco is up 3.33%. So the other stocks also up on your screen. HDFC Limited, which reported numbers yesterday, is up about 1% as well. It's at the bottom of your screen in case you want to have a quick look. Nifty is up 30 points, so which is not bad at all. 78.36 is where the Nifty finds itself at. Rohit, just a quick view on what's happening globally. What's caught your attention?
Yeah, what we are seeing there too is pretty similar, that very small moves, at least in the US. But I think a lot of the bigger selling has come in other markets, either European or Asian. So you've seen Asian markets weaken much more, Japan, Thailand, and so on, Jakarta. If you look at some of these odd places, Korea. And if you look at, places in Europe, the DAX, FTSE, which is Britain. And so many of these markets actually weakened a little more than the US. And in the US itself, the NASDAQ was the weakest part of the market. But essentially, the big trend that we've seen since January, which is still appearing to continue, has been the falling dollar. I think that's been the key driver. It's driven up most commodity prices. It's still not clear whether that trend will reverse, though we keep looking for the potential of that happening. But it has still not happened as yet very clearly. And even if we do get a near-term correction, I think the potential for more upside in the months ahead remains as far as commodities in general are concerned. So they could get overbought, you could get a correction, but then they may start moving up again. So I think that's one particular theme, and it's not very clear whether it's related to a demand environment or just the falling dollar. Right now it appears just the falling dollar, because in general you're seeing a drop in revenues everywhere. So that's the key theme, which is that you have rising commodity prices, and that also includes the agro commodity prices that I've been speaking of. So all of them appear to have moved up, and specifically precious metals have caught the attention of most traders as of this moment. So that's what's happening around the world. You're seeing weakness in equities, and you're seeing strength in commodities, a complete inverse relationship going on.
So you think that will continue, or should we expect a bigger move in equities going forward? Is there a chance we'll see a bigger move?
I think the move in equities could be more on the downside. That remains my view, looking at the way we've seen turns in so many markets. One of them, of course, like I said, being the Nasdaq, it could not even fill the gap that it left behind in January. So in January, when you got the big market sell-off in the US, the Nasdaq actually left a very big gap down, and it attempted to get beyond that, but it could not. And many of the other markets are actually weaker because they've actually not gone beyond the 60% retracement of the entire fall that they had between Jan and Feb, or rather December and Jan. So those declines have been retraced but not surpassed, and they've started to fall once again from there. So the basic look of that pattern is that you started another leg down. Right now it has been slow, which is why it's probably still not getting noticed. You're not seeing volatility expand, but I think as it continues to develop, you will see that happen.
Any specific trades, Rohit, that you'd like to talk about? Any sectors which have caught your attention? We're seeing pretty large moves in some consumer names. We saw a big move in Dabur, for example. Actually, just that space. Everything. Consumer durables, staples, discretionary. One of the strongest areas in the market.
Yeah. The bet continues to be on the same areas that have worked as defensive plays for most of the last couple of years. You can probably hope for some improvement in performance because of some spending that will come in the second half of the year. But these are all micro. So the question is whether you look at the micro movements or you look at the macro movements. And so there are micro moves that are happening. The only sector play which I was looking at was probably commodity based. We've seen a significant rally in metal stocks. Probably want to see them correct before I look at them again. I do see the trend in probably sugar stocks continuing, because you're still seeing an uptick in agro-commodity prices, and wherever that benefits. And maybe defensives. So would you look at the pharma pack as a whole? I've highlighted a particular stock like Biocon I spoke about last time. That's a very particular stock that actually didn't perform in the whole pharma run and is doing well right now. So I would look at that, but I would not look at defensive plays that are rallying in the short term. They too tend to hold out on a relative basis from with the market. So if you're looking at buying pharma or FMCG, you're probably thinking that if the market falls, you'll lose less in those segments. So that's a very relative kind of thinking. But if you're an absolute player, and if you're bearish on the market, you'd probably not want to be too long on anything unless you have a longer term view on it. And one of the other observations is that we're seeing this spectacular strength continuing in the mid and small cap segment. So a lot of the small stocks are continuing to shoot up once again. And my sense is that we haven't seen relative underperformance in that segment for almost most of last year. Even though the key indices actually declined for almost 4 to 5 quarters, that is the Nifty and Bank Nifty. So the next leg down is going to be driven by that segment, which is why you need to be particularly careful about the mid cap and small cap stocks that continue to drive the attention of investors. But my sense is that's the riskiest area right now. It may not appear so at the moment, but when the shock usually comes to the mid and small cap segments, it happens pretty suddenly, and you should be aware of it.
Rohit, thanks very much. It's a pleasure. Shorter conversation today, but always good getting that perspective across. Thanks indeed.